Hey everyone, it's Mike Valtos, and welcome to the Delta Scalper analysis for Friday, July 28, 2017. I've been creating these videos on the Delta Scalper almost every day this week. I think I missed Monday, but again, I want people to see it every day, right? I don't want you to think that I just post a chart here and there of a nice trade. I'm trying to show it to you every day so you can see it and make a decision and see if it's going to be useful in your trading or not. Everyone trades differently. Everyone has different time frames they're trading. Everyone has different chart types they're trading. And again, I'm trying to show you all the different combinations, different chart types, different range, different time-based charts, and different contracts. So, you can make an informed decision if you want to pick this up for your trading. So this presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. There are risks in trading. You can lose money. There, I've said it. People don't want to admit it, but that's the cold hard truth. When you're an individual trader, you can lose, everything you put in. So the tools used in this presentation are the Delta Scalper. Go to www.deltascalper.com. So first, I'll talk about the crude oil. This is 987 tick chart. Okay. Obviously the one that stands out is this big trade here early in the morning. Was there anything else? No, nothing here. So 7:45, got to sell, didn't work out. Here at 8:30, got to sell. Started going in the direction, then snapped back really quick. But then 8:55, you got a nice buy here from 49.40 all the way up to 75. The sell started to work out, but then it came right back up. The sell, again, it's not the greatest winner, but again, if the market's only giving you 15 ticks, take your 15 ticks. Late in the day, you got it. The sell didn't really work out. A little sell here, a little buy here. Now, again, that's the 987 tick chart. If you look at a 5 minute, it's a bit different. Overnight you had a sell here that worked out over the next hour or so. Then you got a buy here, started to work, then boom, you got slammed right here. Here's a sell. You got a little bit here, but you don't get this move on the 5 minute chart the way you got it on the 987 chart. Then 1 o'clock, you got a nice buy here, a little sell here. This one, right on the close. So again, that's the 5 minute chart. I just showed you the 987 tick chart. And really quick, this is the 8 range chart. Wasn't very productive on an 8 range chart. You got a small winner here, not much here. This one definitely is a loser. But then up here at this high, you get a nice little move. So it was a struggle. It reminds me of watching Tiger Woods when he used to be a better golfer than he is now. But you'd see him drive on the tee, and he'd shank his tee shot off somewhere, and then he's got to play catch up and just struggle to make par. This is the type of chart that is like that. You kind of you get a nice little shot here, and then you're getting your up and down. You're trying to get it all right. Bad shot here, but then hopefully you could get something back here to save par for the day. Okay, so next up, I'm going to talk about the DAX a bit here. Now, I'm going to explain something about the settings. So, I've really explained the settings and what it looks like on when you make some adjustments. Now, really, the only setting that you really want to play around with is this look back bars. And here the default is set to 7. And if you want to filter out some of these trades, like these that aren't very productive sometimes, like this one here, you can change it, right? It's set at 7, so you can see here you got a buy here. This one works. These sells don't really go anywhere. This buy doesn't really go anywhere. If you stretch it out to a higher number, like this is 20, okay? This chart, I'll just put them side by side so it's a bit easier to understand. So this is, whoops, this is the 7. What am I doing? Sorry, you know, I don't have a professional videographer or anything like that. You know, I just make these videos, you know, at the end of the day. So, you know, just to help you see it. So if just bear with me again, you know, sorry, my production cost is 0. But so again, you know, you know, changing the setting, right? This is 7, this chart here on the right. On the left, it's set at 20. So it's going to filter out some of these trades that aren't very effective, and there's going to be less trades with the higher setting of 20. So you can see, are you getting better trades? You know, here you just get this one, you get this one, you know, which is, you get, you know, that's that one and that's that one, but it cuts out some of these shitty trades. You know, then you don't have anything else for a while here. Then you get another sell here. That's at 451. So it cuts out, you know, this trade here. It cuts out this trade. So it does cut out some winners, but more importantly, it cuts out the losers. Let's say the losers, but it cuts out, you know, a bit of losers here on the way back up. You have this losing trade here. It's not showing up when you have it set at 20. So, you know, that's a setting that I like to use sometimes on volatile markets. You know, I said the further you set it out, you know, here you get this buy that fails. This one, this is 735. That's this trade here. You know, it's just a way to filter out, you know, some of the less effective trades. Again, you don't get the buy here that you have here, but you got those 2 sells here. That's better. So you don't get this trade here that you had here, you know, which resulted in a nice trade, honestly. But again, you know, look how many losing trades you've cut out already. You know, here you get a nice winner, here you get another nice winner. Whereas this area right here is this area here. So you don't have these trades, you don't have them there. But again, you got this one, you got this one. But if you're looking at this, the one set at 7 rather, you know, you get this sell here right after you get the buy. But here it's not even appearing on this chart. So you know, that's a setting you can use and, you know, experiment with, you know, then sell. So, you know, overall, which chart do you think performed better? You know, the one with the setting set to 7 or the one with set to 20? You know, because when you set it to 7, you're getting some losing trades. You're getting more losing trades. You're getting more trades for one, but you're getting some more extra losing trades, right? And you know, every time you have a losing trade, it sort of drains on you. But when it's set to 20, I mean, how many losing trades do you have here? Let's see. This is a winner, 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 small winner, 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 loser. I mean, it is mostly winners. You know, you've got rid of some of those borderline trades by setting it at a higher look back period. Now, you know what the look back period does. Obviously, when it says look back period, it's analyzing the last 7 bars versus the last 20 bars. So if you set it to 20, it's analyzing the last 20 bars as opposed to the last 7 bars. So, you know, that's something you can play around with. I said the default is set to 7. I use that on majority of my charts. But, you know, markets that move around fast, you know, NASDAQ is a good example, Dow, mini Dow, DAX, obviously, you know, you try it with a higher number rather than the default, you know, but the default I have on pretty much every chart, even the charts that I have it changed to 20, I also keep a 7 open, you know, just for references. You know, I want to know what it looks like and what it's doing. Okay, so S&Ps. We'll jump into the S&Ps. So this is the setting again, 7121. Just the normal default settings. Got a nice little winner here, winner there, winner there, winner there. This one stopped you out. A nice move up here. You know, something here. So, you know, again, you know, it's giving you some nice trades here. And Okay, so that's the what is that? That's the 4 range. Now, again, here's a 1 minute chart. This one's set to 20. Okay, it's on the E-minis. Look at this. I mean, it's just up, up, down a little bit. This one it came right back down immediately before it shot up. This one's sort of sideways. And you got that nice move here. It's trying to get something going here and here, but the market just wasn't having it. And that's the cash open. Now I want to show you the 980s, but that's set at 20. I mean, I could show you the 1 minute if I could dig it out, but it's just probably just going to have some more trades that are probably just some winners and losers mixed in there. But again, why is it important? Is because again, if you can filter out trades that include a lot of losing trades, mentally you're going to be better off, right? Okay, so this is the 987 chart, 987 tick chart in S&P. So what do you got? You got a nice move here, sideways here, a nice move lower, 68 down to 64. Actually went lower down to 63. A little bit of a move there before it snapped back, and then a buy here. This is that difficult area where as soon as you get the buy, it just comes right back down on you pretty quick. And a little bit of a sell here. And again, this is after the cash close already. Eurocurrency. I think I showed you this in my other video, but again, it's the 5 minute chart. You're getting some nice, not some nice trades, because even though it looks like all big bars, it's actually quite not a big movement day. But again, from 117.27 all the way up to 40 plus, and then another nice move here, little move. You get some decent moves here in the euro currencies. This one failed, but then again, a nice decent move here from this 80, I don't know what you want to call it, 84 area down into the 70s. So you're getting some decent trades there in the euro currency. Let's see if I can dig up a Japanese yen chart here. And I want the 8 range chart in the yen. Just bear with me here. What happened to it? So again, it's here, let's just go back. So it's like, oh gosh, okay, you get a nice move here. Again, I'm going from the back forward because I want to show you, this is a losing trade here. This one, you try to stop, you did okay. If you don't, you're stopped out. And this one, nice little move up. This one, difficult one. You probably would have trailed your stop and got out at a small loss. Got a winner here. But again, it's like, this area is difficult, right? Sometimes you're going to run into areas of difficulty. But, if you come back, going back to, you get this move here, a move from 45 all the way up to 75, 80. Happy days, right? Happy days. That's what you want. You get a nice little move here, nice little move there. So you're getting some areas of difficulty, but then that's fine. You can deal with these areas of difficulty if you're getting these big moves like this. That's what you want. But sometimes you just gotta sit through the crappy crappy trades. I mean, I hate to say it, but sometimes the market is just shitty. You're trying to trade it, and it's just jumping up and down. It's just facilitating trade. That's what the markets do. But it's going to be difficult at those times. You just gotta sit through it. It's just like going out on a date with a girl you don't get along with. Yeah, you could just end the date and say, hey, fuck it. Let's obviously it's not working out, but be a gentleman and see the date through. I'm just going to throw this chart up there. I haven't talked about this indicator. This is the transition indicator, different than the Delta Scalper, but I mean, people have it. Sometimes they say, it's not that good, blah blah blah, but then they don't want to send me charts. If you send me charts, sometimes I can work with you and help you with the settings. But you're getting nice trades here, it just kills me because sometimes people say, oh yeah, I lost on this trade. Well, you got in here and they got out down here. Well, why didn't you get out on the move down rather than let it stop you out? But again, that just comes with understanding how to trade the markets. I think trail your stops. Don't treat every trade as it's either got to go to the profit target or stop me out. That's the whole idea of trailing your stop is once the market turns and is starting it's move in the opposite direction, so it hit its apex of the high of the trade, and then it's going to come down, then get out. So this is lastly, I'll just show you this. This is the mini Dow. This is the Delta Scalper, the 100 tick chart. It's a very fast moving chart. But really, let's take a look from the cash open. So here, boom, right off the cash open, get a nice trade. Boom, you're done. Turn off your computer, go out and play with the dog. It follows up with a loss. Get a nice little small winner here, another loss there. A losing trade here, but something here. Nice winner, nice winner, nice winner. Straight down, straight back up. Then another nice trade up. Sort of this difficult area in here. Then another nice winner here. Another nice winner here. After this trade, I stopped out. And that was it for the day. So again, whether you're using a fast moving chart or just a slow moving chart, it's giving you, you got different options on, what you want to use it with. So, again, thanks for watching this video. Go to deltascalper.com to learn more about it. Thanks. Bye-bye.